Yeah, it's my opinion that that time is now. When I'm thinking about buying, I'm looking at a lot of different factors and why, in my opinion, now is the time to strike when you look at 2024. So, one of those things is rates are coming down. That's a great thing. People are projecting rates to continue to come down. Also, a great thing. I love hearing those news. But think about this. Last year was the lowest year in mortgage application volume since 1995. There is a lot of pent up buyer demand that's out there in the industry. And a lot of people have the same creative idea. I'm going to wait for rates to come down and then I'm going to get back in the market because lower rates means better pricing. That is good. And lower payments, that's good. But if you think about it, if you wait till that happens and everybody jumps back into the market, what you're seeing here is rates trend down. The top bar is a 30-year fixed, the bottom bar is a 15-year fixed. If people come back in the market at the same time, inventory in the market is still pretty low. So that's going to drive competition. That could drive prices up. A lot of the estimations I've seen for this year are that prices are going to appreciate somewhere between 5 and 7%. But if we see a lot of increased competition out there, it might even drive prices more. So, what does that actually mean to you? So what that means is if you look at this chart, if you have rates go down, but homes appreciate at the same point, you're not really saving what you think you're saving. So let's look at right now. Rates just came down from being in the mid sevens. We're sitting at around 7% today, but they are trending down. So say it was at 7.5% and it dropped a whole 0.5%. That's kind of what we're expecting quarter over quarter, maybe even getting into the back end of the year. But say the house appreciates for 5% more, whether it's because of competitive pricing and you're in a bid situation, or whether it's just the market continues to appreciate. If that happened, rates drop to 0.5%, the home appreciates at 5%, you're only saving $1 a month. So my advice to you is marry the house, date the rate. You've probably heard that advice out there. What that means is get into the house now while there's still a lot of competition that's waiting on the sidelines for the rates to get to where they want them to be. Buy into the house and then refinance later. If you do that with my team, we'll actually even waive our origination fee to make having that refinance even easier. Because I'm not against you having a low rate. I think it's a great thing. If you look at this same chart, that's 7.5%. If I lost 0.5% and I kept it at today's pricing, I have a great benefit in my monthly payment. So that's the benefit that I want you to realize. That's the world I want you to live in. So get the lower rate, but remember, sometimes waiting for the lower rate doesn't mean you get a lower payment just by having that rate lowered, because you're paying a higher price for the house based on the appreciation that we're expecting. So in my advice, marry the house, date the rate, get into the house now with lower competition where you can get the house at a better deal, refinance later when rates go down, and get the best of both worlds. Take care, everybody. Hope you're having a great day.